The topics that we're going to discuss tonight. First of all, ringgit slides to a 25-year low, now at the 1998 Asian financial crisis level, Friday's close of 4.769. It's not a pretty sight, and a lot of people are worried about this, which is why tonight's session you will receive expert insights on not only budget 2024, but on the ringgit as well. Why this is happening, and is the conflict in the Middle East the only reason for the ringgit's weakness? Okay, this and more in our weekly analysis, as usual, not financial or legal advice. A quick shout out to all our current gatherer members, our Patreons. Thank you all so much for your support. Allow me to start with Andrew, Wendy, Edward, Alex, CC Is, Morpheus, Urshad, Caveman, Balls, Calvin, Kai, Tommy, Jinkang, Adrian, Eric, JS, Wenyan, Dean, Duhan, Ken, Faris, Alan, Jackson, Rizan, Jeremy, Lee, and Jeffrey, as well as all of our learner members. So on Thursday, I had the privilege of hosting a discussion between two financial experts. Hann Liew is now the founder and CEO of Halogen Capital. He used to be the used to be the CEO of Ringgit Plus. Ex-investment banker, he's a chartered financial analyst, certified financial planner. Mr. Sani Hamid, he has over 30 years of experience in the financial markets. He's an economist and a certified financial planner, and we really delve into budget 2024, its potential impacts, yeah, both positive and negative to the rakyat. We also discussed about the ringgit's weakness and its road to RM5 against the US dollar. And finally, we settled on what assets that investors should consider with geopolitical tensions on the rise. So the full replay is now available on Spotify. So just open up your Spotify, search for At the Futurist, that's with a Z, yeah, and you'll be able to listen to the latest episode as well as all of our previous episodes with these two speakers. Okay, and tonight's session will really just be a detailed breakdown of what we discussed during the entire 1 hour and 40 minutes. Okay, so to open the session, key points of budget 2024, just in case you guys have no knowledge about this. Okay, so diesel subsidies will be cut in a phased manner. Electricity subsidies for the top 10% of consumers, this one is expected to continue next year. The temporary price controls on chicken and eggs, it will be lifted. Finally, SST, this one will increase to 8% from 6%, but it's excluding food and beverages as well as telecommunications. Okay. So the first question that I asked the speakers is, what are your opening impressions of budget 2024? Yay or nay? And both of the speakers agreed that, budget 2024 is okay, but it could have been better. Okay, for instance, the removal of diesel subsidies, right? Why not just use this opportunity to rip the band-aid off and remove petrol subsidies as well? Just go all the way. Okay, because in 2022, the government has been spending more and more to keep prices artificially low. Yeah, 80 billion ringgit last year. And this money could have been spent in various areas in Malaysia, right, to better our economy and our fiscal position, right? And the budget looks all right, Mr. Sani said, but it will ultimately fall on how the details are carried out. In Malaysia, we tend to propose a very good budget, very good details, but majority of the time, when it comes to implementation, right, we have quite a bit of problem over here. And talking about the removal of petrol and diesel subsidies, right? Han said that, hey, in order to counteract the price increases, the government could increase cash vouchers to poor and needy citizens, the poor and the middle class, as well as the sumbangan tunai ramah. So the next question, how did the markets react to budget 2024? And as you can see over here, pre-budget, post-budget, there is quite a bit of a positive reaction from investors. Okay, before the budget itself, the FBM KLCI rallied by 1.5 to 1.75%. And the very fact that the market remained in the green after the budget itself shows that investors, they took away something positive from next year's budget. Okay? But as for the ringgit, yeah, we all know what level it is. I gave you guys a hint just now. Friday's close 4.769, the Asian financial crisis 1998 low. But pre-budget over here, you can see, right, the ringgit is trying to readjust itself. That could be a hint at the investors' probably positive reaction, trying to do a comeback towards the ringgit. But unfortunately, the geopolitical tensions in the Middle East continue to strengthen the US dollar, resulting in a much weaker ringgit. So the next question is, will the removal of ceiling prices of eggs and chicken correspond to higher overall prices? This one is a very controversial policy, and it got quite a lot of citizens on edge, right? Because these 2 years itself, we've seen prices of chicken and eggs go up sky high. Okay? People are paying more and more, and now the government removed price ceilings. I have to pay more again, right? So we as citizens, we are quite unhappy. But the speaker said that yes, it may cause a price spike in the short term, but this is a good policy in the long run. Because if you take a look at it factually, artificial ceilings were the main causes of shortages and decreased quality. Hey, when you put a ceiling on the prices of goods, right, the business owners as well as the farmers, they are unable to make a profit. This is what happened last year, right, which resulted in Malaysia running very low on chickens and eggs. Right? Farmers, they are unable to make a profit, then either they leave the industry entirely, or they export chickens to other countries in order to raise their profits, or they cut costs, decrease the quality of chickens, right? And the government, at the end of the day, could use this subsidy money again to spend on other areas. As for worries that the price will spike and stay there, the profiteering, right? As for worries that the cartels will keep prices high and profiteer off citizens, well, supply and demand will gradually rebalance itself. Because if you think about it, if prices are high, that should attract more players to come in, right? And when more players come in, the supply will increase and gradually the price will rebalance itself. And as long as it's an open market, there shouldn't be a very big long-term impact. Okay. And talking about profiteering, let's think about it. The current prices of chicken is around 8 ringgit 30 cents to 8 ringgit 40 cents per kilo. That's way below the ceiling price that the government set of 9 ringgit 40 cents. So if we are accusing the cartels and businesses of profiteering, then they would have easily set the prices of chicken smack bang at the ceiling price previously, 9 ringgit 40 cents. Right? So this is a question that you guys should consider more about. Okay, and long-term wise, the removal of price ceilings is a good policy. So the next question is the SST increase. Yeah, another controversial one, from 6% to 8%. Will we see companies pass down the cost to consumers or not? Now, the purpose of this, the government said, is to boost their revenue. And though it will not affect F&B and telecommunications, other industries will be affected, yeah, like the logistics, supply chain, entertainment, etc. And the speakers agreed that it will eventually lead to price hikes because these companies, they will find whatever reason, whatever excuse to raise their prices. But Hann said that it's probably a hint at the government's plan to re-implement GST the following year. Question number 5. Government is phasing out of diesel subsidies. Is this a good move or not? This is another tough question to tackle because the logistics and supply chain industry heavily rely on diesel. Right, and right now, since the government is removing all these blanket subsidies, right, will we eventually see, like the previous question just now, companies pass down the cost to consumers or not? And the speaker said that, hey, this is actually a good move because we must take a look at another more major issue, which is the profiteering of diesel. There are companies right now, they are buying Malaysian diesel at a much lower price and selling them to other countries illegally. Right? Boats, tongs of diesel, they drive across boats, exporting to other countries. And because Malaysia's diesel is currently fixed at 2 ringgit 15 cents, and the government subsidizes 1 ringgit 60 cents per liter of diesel. And subsidies are in fact the rakyat's money, right? Rakyat's tax money. And do you want the government to constantly pay these companies, companies that you do not have any share in, and increase their profits? Or do you want them to, stop this, gradually remove blanket subsidies and reduce the rakyat's reliance on subsidies? It may lead to overall price increases, yes, but the government can counteract this by raising the Sumbangan Tunai Rahmah or cash vouchers for citizens. Okay, so long term wise, this is definitely a good move. The sixth question, the second last question. The removal of subsidies. Yeah, just now we talked about the price ceilings, diesel subsidies, right? SSD increase. Will we see inflation tick up next year now? And ultimately, if inflation ticks up, will it force Bank Negara Malaysia to raise the OBR? So the speaker said that because of the removal of the subsidies as well as the SST increase, inflation is likely to trend upwards next year, yeah, due to the budget. But whether or not this will force Bank Negara Malaysia to hike rates, it will depend on how consistently elevated price pressures are. So give an example, let's say next year in January, inflation spikes up to 3.2%, right? Way higher than the central bank's target goal of 2%. Right, so but the next month in February, say it spikes back down again. It reduces, it cools down to 2.4 or 2.5%. Then there's really no cause for Bank Negara Malaysia to panic, right? But if it stays consistently high, let's say January 3.2%, then February 3.2, March go up some more, 3.4%, that may just force the central bank to keep interest rates higher for longer. But we have to see, okay? For now, Anwar, as he announced Budget 2024, he said that inflation next year is forecasted to range between 2.1 to 3.6%. But the speakers, they are not really worried about this. They're more worried on geopolitical tensions. Yeah, like the conflict in the Middle East, the Ukraine war, that one's not really settled yet. US-China tensions, right? All this could cause global inflation to spike back up again, and at the end of the day, force central banks to keep interest rates higher for longer. Okay. So the final question of the night is, what's happening to the Malaysian ringgit? Yeah, this one is, I think, the most asked question. And is the conflict in the Middle East the only reason for the ringgit's weakness? Now, the speaker said that 80 to 90% of it really comes from geopolitical uncertainty, primarily the conflict in the Middle East. Yeah, external factors that are beyond Bank Negara Malaysia's or the government's control. Yeah, and the Central Bank of Malaysia, yeah, they can only lessen the local note's day-to-day volatility. Yeah. They cannot change the long-term direction of the ringgit. Even if they can, they wouldn't, because they would have to burn through a large amount of their foreign currency reserves, and that ultimately wouldn't be a sustainable solution to the problem. Yeah. What we are really seeing right now is dollar strength and the flight to safe havens. Okay. Take a look at this chart over here. That is the US dollar index. Yeah, since its July low, the dollar has rallied by 6 to 7%, and that will correspond to a weaker ringgit as well. And if you take a look at gold, yeah, in the past 2 weeks itself, gold has rallied by 8 to 10%. No thanks to the conflict in the Middle East. Okay. So ringgit expected to remain weak for the rest of the year. Yeah, that's something that we have to take note of. Okay, I know I previously talked about MIDF's prediction, MIDF's research on the ringgit ending the year at 4.30. Yeah, it's seeming more and more like a pipe dream right now because MIDF's prediction that was before the conflict in the Middle East. Okay, but let's look at the bright side. Next year, ringgit is likely to strengthen because central banks are most likely reaching their peak of interest rates already, and they may look to gradually reduce interest rates next year. And we may just see the dollar come off, and consequently, it will correspond to a stronger ringgit. Okay, and that brings me to the end of my summary session tonight. Hopefully, you guys learned something, and I will see you guys in the next one. Good night, guys. Bye. Stay safe.